I could not undo this hard coding that I had done. Stresses are running high. We need to get this out the door. I completely messed it up.
What's the key takeaway?
The key takeaway is do not take...
What role does strategy play when you're building models?
I don't think this gets talked about enough. It's absolutely critical, but if you've lost sight of wait a minute, does this even fit with the company's strategy? The model's not going to be that useful, actually. Scenario analysis, of course, a big part of financial modeling. I think you really have to dig into those scenarios with a strategic lens.
And there isn't one right framework, right? There's a reason there's dozens of them.
You just got to try a bunch of stuff and see.
What's the number one lesson you've learned?
I realized that you can propel yourself forward a lot more quickly. Combining two or more unique.
Welcome to Financial Modeler's Corner, where we discuss the art and science of financial modeling with your host, Paul Barnhurst. Financial Modeler's Corner is sponsored by Financial Modeling Institute.
Welcome to Financial Modeler's Corner. I am your host, Paul Barnhurst, aka the FP&A guy. This is a podcast where we talk all about the art and science of financial modeling with distinguished financial modelers from around the globe. The Financial Modeler's Corner podcast is brought to you by the Financial Modeling Institute. FMI offers the most respected accreditations in financial modeling, and that is why I completed the Advanced Financial Modeler. This week, I am thrilled to welcome to the show Tim Vipond. Tim, welcome to Financial Modeler's Corner.
Hey, thanks so much for having me on. I'm excited to chat with you.
A little bit about Tim. Tim began his career as an investment banking analyst at CIBC Capital Markets in 2005. After working on a wide range of mergers, acquisitions, and capital raising, he went to work in wealth management at Scotiabank. After completing his MBA, Tim worked in strategy and corporate development at Newmont Goldcorp, and then was recruited to be the VP of Finance at Shoes.com. Following that, Tim co-founded Corporate Finance Institute, which has now trained over 2 million students. You've accomplished quite a bit there, Tim. Impressive.
No, thanks. Well, when you condense it all down to a short summary like that, it sounds impressive.
Isn't it funny sometimes when you see it all in a short, you're like, well, I really have done a lot.
Yeah, distill it right down.
Yeah.
Sure, yeah.
So we like to start every episode with this question to kind of have a little bit of fun and see everybody's horror story, because we all have worst model you've ever seen that you've had to work with.
Well, I'll tell you about my financial modeling nightmare. I don't know that it was the worst model ever, but it was definitely the worst modeling experience I've ever had. Actually, way back at the top of your intro there at CIBC when I worked in investment banking, I was working on a pitch book late at night, as you often are. We're about to send it out to the client. There was some sort of last minute change that was required. And I don't know why I had to hard code some numbers into the model. It was like a couple minutes to do this. So I was like, okay, the only way to do this is to hard code some numbers. Later, we need to go back to a previous version of it. And I had somehow saved over. We didn't have autosave back then. And I could not undo this hard coding that I had done. So, it's like 10 p.m. Stresses are running high. We need to get this out the door. I completely messed it up. And, I had to have a very hard conversation with the director that I was working with, who was there with me late at night, explaining what had happened, and had to then take time to rebuild a whole bunch of stuff. So that was extremely stressful and painful, and but a great learning experience for me as well.
Yeah, I think we probably all have a story where we've done something with hard coding, especially before autosave. I know I've done a few things where I go back and I'm like, wait, I could have swore I saved this. This is not what I expected. And you're just like, go back and redo it. So what's the key takeaway? You said it was a great learning. What was the number one learning from that?
Yeah. The key takeaway is do not take modeling shortcuts. Meaning, when I say shortcuts, I don't mean like keyboard shortcuts. I mean, don't skip steps, because they'll come back to bite you later, right? Anytime you think, oh, I'll just hard code this and remember to change it later, it's actually very likely that you won't remember to go fix it later. Do it the proper way the first time. but it's hard when you're under pressure, like when there's a deadline to meet and hey, I can do it this quick way, that's not the right way, or the right way that takes more time. There's going to be that tension there, but I would basically say, never take shortcuts in your modeling.
Yeah, it's really easy to do, and it often comes back to bite you. I'm with you. I've been bit more than once where it's like, oh, there's a hard coded number there. This is not good, because you think, oh yeah, I'll remember, right? We all think.
But you won't. But then you're busy and you get distracted, and you're never going to go back and fix it, or it's late at night and you just want to go home, and you're just just not going to do it. So don't do it. Although I'm sure it'll probably happen again for some reason or another.
Oh, I'm sure it will. It's like FP&A when you're in the middle of the night trying to load that budget and the numbers don't tie, and you're finally like, just plug it. I'm going to bed. I don't care anymore. We'll figure out the $1 million later.
Yeah, just insert a plug line. Yeah, great.
Generally not good ideas. We've all been there. When you're tired enough, sometimes you do it, but it doesn't mean it's not going to come back to bite you. So I would love to know the story of how you built the Corporate Finance Institute into what it is today. How did you get into training?
Sure. Yeah, happy to talk about that. It's sort of a bit of serendipity, if you will. A bunch of things came together. But after working in corporate finance for a while, I realized I wanted to move up through an operating company like Gold Corp, where I worked, for example, be an executive, or who knows, maybe a CEO someday. And I realized that all these great executives had awesome public speaking skills. They were really comfortable talking to investors, to all the employees of the company. I wasn't very comfortable with public speaking. And I thought, hey, what's a way I can do some public speaking? Well, if I design a course about financial modeling and go deliver it at the university where I live in Vancouver, UBC, that would be a great public speaking experience. So I did just that. And doing that got me connected to a company called MDA Training, which was actually hired by this university to do financial modeling training. So I was actually competing with them without even really realizing what I was doing, because I kind of hacked my way in to go teach this course that MDA was paid to teach. That got me connected to them, and they said, hey, why don't you work with us and teach with us? And so I did a little bit on the side, but I said, look, ultimately, I don't want to be a live instructor. I want to, be an entrepreneur or an executive or something. And we came together to start Corporate Finance Institute with some training materials that they had developed over the years. They've trained countless global banks. I've even gone to one of their training programs in London for Deutsche Bank for a week, where we trained, hundreds of new analysts at Deutsche Bank. So it was quite a thing to behold, actually. But that's how it all got started. And then I went on to work at shoes.com. And while working at shoes.com, I was obviously very deep in the sort of e-commerce and SEO space. And I realized from looking at shoes.com's business that organic sales were much better than paid sales. Might sound super obvious, right? But it was hey, if you could build the whole business on organic traffic, that would be the ultimate way to build an online business. So I focused a huge amount of effort on articles and content creation for SEO, for Google search, but then ultimately for YouTube and basically all the organic channels, which had this nice virtuous cycle of then feeding back into content for the e-learning business, right? Which created more marketing content and getting that cycle going. So that was a big focus in growing the business. And then maybe the one other thing I'll add as well was that, at the time, everyone in the online training space just had a collection of courses. There was really only one certification out there, that was CFA, and all finance professionals kind of defaulted to CFA. But the program's mostly focused on portfolio management, right? Which is not relevant for a lot of people in finance. So I thought, hey, there should be an alternative to that. There should be something that is extremely practical and useful for a bunch of other finance roles like FP&A and investment banking and so on that do financial modeling, that doesn't cost a fortune or take 4 years to complete. Like CFA, the pass rate on CFA, I think all the way through last time I checked, is 30% or something through all the levels. So I was like, okay, that's not working for a lot of people. And that's what led us to create the FMBA and the other designations that we've created along the way.
Got it. No, that's helpful. I appreciate you sharing that. And yeah, I see a lot of people think, should I take CFA? And I'm like, if you're in corporate finance, it's really not relevant. There are areas where it can be helpful, but there are a lot of other certifications you can take. I wouldn't take it just because it's well known.
That's right. It is a badge of honor, though, or an indication that you are obviously smart enough and hardworking enough to get through it. So I think that could be, in and of itself, a great reason to take it. And it's, like, no disrespect to it, it's a great program. It just doesn't work for a lot of other people, I think.
Yeah, there's different ways to do it. It's not the only one. It's a great program. No, I did level 1. I've had Rob Langrick, if you know him, he manages a lot of the content for CFA. He's over kind of a number of the programs there. I've had him on the podcast, and if you do it, you're definitely dedicated. There's no question. Absolutely. You have to put in a lot of time to pass CFA. I remember how much I studied for level 1 and then just realized not really going to use 2 or 3. I'm going to spend my time elsewhere.
Yeah. But if you want to be a portfolio manager, absolutely critical. You have to do it.
Yeah. Great. I agree. If you're working portfolio investment, there's areas where you want it and it's fabulous. There's other areas where you have to decide if it makes sense.
Yeah.
Well, what I want to jump into, when you and I chatted ahead of time before, coming together to record the episode, one of the areas we talked about was the importance of strategy, right? We always hear technical skills and, hey, you got to be good at Excel and know your shortcuts, understand your accounting. But I think a lot of times people don't realize the role strategy plays in modeling. So I'd like to get your thoughts. What role does strategy play when you're building models?
Yeah, that's a great question, because I don't think this gets talked about enough, but it's absolutely critical in building a useful financial model, right? I often think about things as like the high level big picture or the nitty gritty details, right? That are both critical for a world-class financial model. You need to have that big picture and the detail. Now, it's easy to get dragged into the detail of the formulas and the functions and, really sort of detailed calculations. But if you've lost sight of wait a minute, does this even fit with the company's strategy? The model's not going to be that useful, actually. So there's that. Another thing is strategy, to a big part, is about trade-offs and strategic choices, right? So it's easy to be looking at scenarios in a model and say, oh, what if we increase prices or decrease costs and change all these assumptions and variables? But again, you have to tie that back to the strategic choices or sort of mission, vision, purpose, the bigger picture of things that the business has said that it cares about, right? or otherwise you're just sort of doing this exercise, on your own in isolation, and it's not going to be very useful. So that's another comment that I'll make just about strategy and financial modeling.
Funny, I had a boss and I really liked the way he put it when you said trade-offs. He goes, strategy is about closing doors. There's going to be more opportunities than you have time or resources for. You have to decide which doors to close and which ones to leave open. And I really like that way of how he explained it, because it's sometimes we just want to do everything. I'm sure you struggled with that as you were growing CFI, is getting distracted by opportunities that really may not have made sense to the core business.
Absolutely. And I love that analogy about the doors, because I think about that one. I think Jeff Bezos used it too, but he added one extra layer to that, which is there are one-way doors and two-way doors. And this is also important in strategy. If you're going through a one-way door, you can never go back. You have to think very carefully and strategically about if you want to go through it. But there's a lot of doors actually that, it's not that big a deal. We can go back and forth. Maybe changing price is an example of something where you can go back and forth, right? So there's that as well, which I think is interesting. And absolutely with CFI, staying focused on what works, what adds value for our students, right? Our core principles and all that kind of stuff. Absolutely. It's a big part of running a company.
Yeah, no, I mean, I think it's true for any company, right? You got to kind of figure out what your core principles are and how you stay true to your strategy. We've all seen it. There's so many companies where you're like, how does that fit with strategy? The example I gave, I worked at American Express and we started prepaid cards for the unbanked and underbanked. And it's how does that really fit with American Express's image, its strategy, its brand? And the reality is it didn't. And they reorganized that whole department and then sold it off once they had eliminated a lot of the cost.
Right. If their brand is about exclusivity and luxury and like you sort of by definition, then right, how can you go in this other direction? So that's an interesting example, right?
Yeah. Yeah. And there's others like that. Some of these airlines trying to be low cost airlines with a regular cost model. It's not going to work. And the other one I've always loved is I had someone who say, strategy you'll be able to see in the bottom line. If you have a good strategy, you're going to have above average return. You should be able to see it in your financials. Maybe not immediately, but over time.
I would say strategy coupled with execution. Like, what's the quote? It's like amateurs talk strategy, professionals talk logistics. I think it's a military expression, but it's only to say that like a strategy without execution is nothing. And, that's just something else that I think tie back to financial modeling, right? I think the model can help you see the execution. Like you have this strategy, but once you break it down into all the steps that are required to execute on it, from the people you have to hire to all the things you have to do, it's like, wait, can we actually execute on this, with a set of reasonable assumptions or not?
Yep. And that leads me to two questions. First one is, how does a modeler get comfortable discussing strategy? Making sure the model makes strategic sense. Because I think sometimes the modeler feels like I'm just here to build the model.
Right.
And put in the assumptions, but they'll see things that they can tell like this doesn't make sense or this doesn't align. How do you get comfortable having those conversations?
I think a great place to get started, whether you're at a public or private company, is to look at the public companies because there's so much out there on their strategies. So if you're at the public company, you look at that. If it's private, look for the comparable that's public. Okay. Go to the IR section of their site, look at the quarterly earnings calls, like listen to those calls, look at the slide decks that they put together. They're going to talk a lot about strategy in there. Listen to the equity research analysts ask their questions. They're going to ask, great questions related to strategy. And then you can also even get like the proxy statement or some other filings that'll have the CEO's objectives, right? So if you're thinking all the way back up to the CEO's objectives, like you can't get much higher level than that of like, are these decisions and things we're talking about down here, do they map like back up to some corporate objective that we've publicly stated, right? So I think that's a good way to get comfortable because first you're reading about it, you're seeing questions or listening to questions that are being asked, and then you can start to like bounce those off people at your company. Just talk about the industry and the strategy with people. I think that is a great way to get started.
I really like how you talked about just the importance of reading the company's financials, the statements, the strategy, right? Public companies, they're going to state all that right there in their 10Ks, 10Qs, their investor relations, those calls. They're going to let the public know how they're thinking about things and what the risks are. And so much that you can bring into strategy. And listening to some of those, you get to see the questions that analysts ask, often around strategy. And that may inform some of the questions you're going to ask. And then also just knowing the company's goals. What's the CEO trying to accomplish? And, what we're building in this model, does that align with that or is it totally different?
Exactly. Paying attention to the industry, right? Like what are other companies doing in the industry? Because that leads to great discussion, right? Just bringing it up with colleagues of like, hey, did you notice that one of our competitors is doing this or doing that? Okay, what does that mean vis-a-vis our strategy? You build the muscle, let's say, of reading about and talking about strategy, and then I think it'll naturally make its way into the financial modeling, at least hopefully.
Yeah, no, I agree. And the second thing you talked about, there's strategy and then there's execution. You mentioned the logistics earlier.
Yeah.
And when you're building a model, how do you think about that? Because most of that happens after the model, but is there things you should be thinking about? Like, is it possible to execute this or these realistic assumptions? Is that what the modeler should be looking at kind of from that execution standpoint, is more the validation to say, is this possible, and pushing back if things don't seem achievable?
Yeah, I think that's right. I think maybe there's a bunch of places we could jump off from that question. One is about assumptions, right? Like, are the assumptions that are required to to hit this realistic or doable? That's one place. Like, I like to think about the assumptions above what I would say is like above the revenue line. So it's like, what are the activities and the things you need to do that ultimately lead down to revenue? To me, that's a guide to some degree. Like let me just give you a really simple example. Is like, if you were building a financial model for Chipotle and you were thinking about their revenue, I just happened to recently see this example. That's why I bring it up. Their CEO has an objective. One of his like 3 objectives is the number of restaurant locations that the company reviews each year. And then you sort of realize like, okay, they're reviewing 300 or 400 new restaurant locations every year. If they want to double revenue, like realistically, how many restaurant locations can they review in a year? What does that mean for the team? Like you think of then, because this will connect to say like fixed costs or not, right? Like a lot of times companies think they have a fixed cost structure, so they have operating leverage. But the reality is like, actually, if you want to way scale up revenue, you're going to actually, some of these so-called fixed costs are actually going to behave more like variable costs. You're going to have to expand your team and so on. So, there's this kind of a circular exercise, if you will, of going through assumptions and then numbers in the model, strategic objectives, and just like working your way through all of them. And so I don't know if that if that was coherent or not, but
that was helpful. I get what you're saying. There's a circular in the sense of you go through the strategy, you put in the assumptions, you got to look at the outputs and say, hey, based on these assumptions, does this pass a certain level of a sniff test? Does this even seem achievable? Because we've all been there. I'm sure you've done it. You look at a model, you get all done, you look at the number and go, either there's a formula messed up or an assumption doesn't make sense, because that's not possible.
Yeah, exactly.
Yeah, I've definitely done a few of those. I still remember somebody giving me a number of like, $10 billion. I'm like, you didn't question this? The industry is only like 5. We're not going to double the industry by launching our product.
No, exactly. And then this will connect to scenarios as well, right? Because scenario analysis is, of course, a big part of financial modeling and maybe even strategic planning, you'd say. But I think you really have to dig into those scenarios with a strategic lens to see if they make sense. A lot of times, in my view, the scenarios that are thrown into a model, like your classic upside case, downside case, base case, are not grounded in strategy at all. Like they're just like, hey, what if our revenue grows way more than expected and our costs go down for some weird reason? Like sort of interplays between variables that are unlikely to actually happen. I think you want to be very thoughtful on your scenarios and your sensitivity analysis, and understanding like correlations between things in the business, right? That might move together or move separately from each other. So that's just another thought as well.
FP&A guy here. And as you know, I am very passionate about financial modeling and the Financial Modeling Institute's mission. I have been a huge fan of the FMI for years, and I was super excited when they decided to sponsor the Financial Modelers Corner. I recently completed the Advanced Financial Modeler certification and loved the entire experience. It was top-notch from start to finish. I am a better modeler today for having completed the certification. I strongly believe every modeler needs to demonstrate they are a qualified financial modeler, and one of the best ways to do that is through the FMI's program. Earning the accreditation will demonstrate to your current and future employers that you are serious about financial modeling. What are you waiting for? Visit www.fminstitute.com/podcast and use code podcast to save 15% when you enroll in an accreditation today.
I fully agree with you on scenario. I think sometimes we confuse sensitivity and scenario and kind of mix them in a way that's not good versus, a good example to use, let's take Tesla. If Tesla is building a case, one case would be, all right, if we end credits, as has been talked about on EVs, what does that look like?
Yeah.
Then all your assumptions are based on a case. And you could also decide what are the management decisions we're going to make if the scenario happens, which I think is the more important part than just having the numbers.
Right.
Is how does that impact the decisions we're going to make? Like for recession, If I build a business case that says the recession's coming next year, what's the trigger to let me know I should start following that case? And what are the things I should be doing differently because of that? Not just, well, I got base, high, and low, which we've all done.
Yeah,
I've built, and then we walk away and go, okay, I feel good. I've done my scenarios. Now we stick in one number and we just go forward.
Yeah, I like what you said, because you're now connecting it to like KPIs and sort of a more of a reporting lens, right? What are those metrics and KPIs you want to be tracking that are connected to the model, but are part of like a monthly, quarterly, whatever frequency meeting and reporting you're doing. Yeah.
So I'm curious, you mentioned, analyzing things through a strategic lens. Is there like a strategic framework you've liked to use throughout your career, or any kind of methodology that's helped you?
Yeah, that's a good question. I mean, there are so many frameworks and methodologies out there, right? Like, you almost build a mosaic with all these different, they're often like 2x2 matrices and things.
Yeah.
Probably know all the classic ones. I don't think any one is better than the other. I think it's about trying a number of them and seeing what provides insight for you. If you want to start with a SWOT analysis, because it's really simple to get things going. Start thinking internally and externally about your business and your industry. That's a good jumping off point. I really like the Strategy House, which is a one-page framework that kind of brings everything together. So it's like literally the shape of a house, where the roof is like the vision and the mission. Underneath that are like the must-win battles or strategic choices that you're making. Beneath that are the strategic initiatives or like projects that you're working on. And it's all supported by capabilities and people and culture, something like that, right? So the reason I like this one slide is you get a quick bird's eye view of like, how do we execute the vision or the mission? What are the key projects that we want to work on? I like the simplicity of that, so that's nice as well. And finally, I think you want to just be grounded in first principles thinking, right? About sort of the what and the why of the business. We mentioned trade-offs earlier, right? Like also having sort of a mental framework that thinks about trade-offs, not just like we'll do everything or what have you. So there's that. Then we could talk about execution. We already talked about execution a bit, but then you could say, okay, how does this fit into the planning cycle? So I also like frameworks that you have your annual planning cycle that obviously includes budgeting and the CFO office and the COO's office, connecting that with the strategic planning that goes on across the company, right, as well.
A lot of stuff there. And I like how you mentioned one-pagers are always helpful. I think, starting with simple frameworks is always a good way to go, because there are some frameworks that can be really complex, and there's a lot of simple 2x2 matrix, and there isn't one right framework, right? There's a reason there's dozens of them.
Exactly. There's no silver bullet. If only it could be so easy that there's this one secret framework you use and you'll be off to the races, right? I think you just gotta try a bunch of stuff and see what works.
Well, if you find it, let me know, because I'm sure we can make a lot of money off it.
Yeah, you and I can launch something with that.
So true. So I'm going to ask you a question, kind of wasn't on the list, but as you were talking, it got me thinking about it. You've built a lot of models over your career. You've done a lot of training. Is there a favorite industry you like to model? Like one in particular that you enjoy kind of thinking about and working on models?
Well, I can just comment on, maybe two things. One that was very interesting was the mining industry, because there is so much modeling that takes place before revenue. Like to get from the material that's in the earth of like rock that has a grade of metal within it, and then has to go through extraction, processing, refining, smelting, et cetera, to revenue. That part of the model in mining is enormous and is very interesting. So I found that fascinating to be involved in building. I actually built the corporate model. That we redid the corporate model at Goldcorp. So it's like quite an undertaking to get, whatever 100 rows it was to get to revenue. Was fascinating, and then was helpful for me later. But I guess I really like, being with CFI and shoes.com, where I've had experience in consumer businesses. I really like, thinking about, let's say, funnels of traffic and users and conversion rates, to get you to revenue. So I personally am passionate about like online businesses and conversion rates and that kind of thing. So anyway, it's also fairly simple to model, which I like.
Yeah. No, those are fairly straightforward. Unlike, I know mining can be complex. I've had some mining guests on, and I was having a conversation very recently with someone that's doing a lot of modeling for pharmaceuticals.
Right.
And that's a really hard one because it's all optionality and weighing risk. And it might be 10 years before you even collect any revenue. And so it's like, how much money are you willing to spend knowing there's a chance that this may never even generate any revenue?
Totally. And if you have like, I imagine it's pretty binary, right? You have a blockbuster drug that just takes you to the moon, or you flop on a whole bunch. So I imagine that would be interesting. I've never built a pharmaceutical model, but so many types of models out there.
It really is. Yeah, I haven't built a pharmaceutical, but it was just interesting to think about, and that whole portfolio approach, just so different than what I built. So I want to ask you a little bit. You started your own ventures.
Yeah.
Kind of your own family-owned investment firm. So do you have a favorite investment you've made to date? Tell us a little bit about that.
I mean, I guess the one that I like talking about the most is an investment I made in a ready-to-drink tequila beverage called Ole, which I think is making its way to the United States now. It started in Canada, but it was a tremendous growth story for like in the ready-to-drink beverage space. Tequila is really hot recently, and there's like a strong trend in place for ready to drink tequila beverages. So the founder of this business built an incredible brand, and I really admire people that have built great brands. So he nailed first of all, he nailed the formula and the taste of the drink, but then he nailed the marketing and the distribution, and so it's a really cool business. And it was actually recently acquired, so I didn't get to hold it for too long, but it worked out well financially. And it was really fun, like getting to know the founder and builder of that business.
Fun. And how do you pick the investment you're going to go for? Like what attracts you to a deal?
It's just like, honestly, I don't focus on any particular sector or industry or anything. This came to me through my lawyer. He said, hey, this company's looking to raise money sort of privately, if you will, and maybe you'd want to take a look at it. And so it comes in through lawyers, accountants, and your personal network, really, I think, for some of these best opportunities. But I would say for direct investing, I just have to believe in the opportunity, right? In the founder, the story, the market, the financials, just kind of tying it all together.
Yeah, that makes sense. So for you, it's really, there isn't an industry. It's just finding deals that interest you, that seem to make sense, that are attractive, regardless of industry.
Yeah, exactly.
Makes sense.
Yeah.
All right. So I'm curious, over your career, as you look back on your career, what's the number one lesson you've learned that you could share with our audience that's helped you the most in your career?
Yeah, I appreciate that question. I thought about it a lot, and I've realized that combining two or more unique skills is probably the best way to get significantly ahead. If you're just, say, an accountant and that's great, but you want to be the best accountant in the world, well, you're competing with like however many million accountants that are just accountants. But if you're an accountant and you are like an AI expert or enthusiast, or a particular industry that you have a tremendous amount of experience in, that's where now you're competing with a lot fewer people, and you can propel yourself forward a lot more quickly. So just like any two things that form a unique combination, or if you can add a third thing like that, that's great as well. So in my case, like combining public, what was meant to be about public speaking with having worked in e-commerce, with having a finance background, right? Like I combined those three things together to build CFI. So that would be my number one tip, if you will.
I think there's a ton of value in that. And I've heard someone call it skill stacking, right? Having 2 or 3 skills that you're really good at that allow you to stand out and have a much smaller pond, so to speak, that you're competing against.
Exactly. I like that term, skill stacking. I hadn't heard that, but it must be the same thing. Yeah.
Yeah, same idea. I don't remember. Somebody said it on a podcast once, and it kind of stuck with me. I like that because it was just an easy way to remember it. All right. So what's the funniest thing, most unique thing you've created a model for in your personal life?
Well, I don't know if it's funny, but perhaps it's unusual. But I did create a spreadsheet for my marriage, which is to actually try to manage, having a partner in life. And I created a dashboard that's like the things that each of us need to make us happy, the things that we want to do each week. And each week you can go in and update the numbers and actually have a sort of a dashboard report, if you will, on the quality of our marriage and quality of our personal life.
And how did you like it when you first came up with that?
Yeah, she didn't like it as much as I did. I thought it was pretty cool, but she didn't really land as well with her. And we don't even use it anymore, but at least it was fun to build it. And at least, we had some good conversations about it. I think it actually shed some light on things, but that's probably the most unusual thing that I built one for.
That's great. Yeah, I was I could definitely see where it could shed some light and lead to good conversations. I was just wondering how she received it, because I know what my wife would say. All right, great. So we're going to move on to the rapid fire section. How this works is you can't say it depends as an answer. You have to pick a side, realizing there's nuance to all of these questions. Then at the end, you can elaborate on one or two that you're most passionate about to kind of explain, hey, here's why I gave the opinion I did. Here's a little more nuance. So the first one, circular references in models, yes or no?
No.
VBA, yes or no?
No.
Horizontal or vertical model? Do you prefer multiple sheets or kind of putting it all on one sheet?
100% vertical.
100%. I like it. Dynamic arrays, yes or no?
No.
All right. That will answer the next one of should we do fully dynamic models? That would be no as well. External workbook links?
No.
All right. Named ranges, yes or no?
Yes, but let me explain later.
All right. We'll give you that one at the end. Do you follow a formal standard like FAST or some of the SMART or others that are out there for your models?
Well, I'd say I follow CFI standards that we've created.
That works.
Yeah.
You created your own. All right. Should financial modelers learn Python and Excel?
For other people, probably yes. For me, no, I have not.
I haven't either, so I get it. What about Power Query?
For other people, yes.
All right. How about Power BI?
Yeah, definitely. Yeah.
All right. Will Excel ever die?
No, and I can also explain why on that later if you like, but no.
All right. We'll let you do that one. Will AI build the models for us in the future?
Yeah, definitely, to some degree.
Okay. What about cell protection? Should we be using that in our models?
No, don't bother.
All right. Do you believe financial models are the number one corporate decision-making tool?
If I had to pick one, yeah, I would say definitely not the only, but if you're stack ranking them, yeah.
Sure. Yeah. Not saying the only,
but
just kind of the biggest. Would it be at the top of the list?
Yeah.
All right. What's your lookup function of choice? Choose, VLOOKUP, index match, XLOOKUP, something else.
It is definitely index match.
All right. I figured that's probably where you would go. And your favorite Excel shortcut?
Okay. If we're talking keyboard shortcut,
yeah, keyboard.
If it's keyboard shortcut, it's Control R for sure. All day long, it's always Control R. But if it's a more of a function, I would say go to special. That's
fabulous.
F5. I think as a right different kind of shortcut.
Those are two great ones. All right, you wanted to elaborate on one and two. I believe circular references, or maybe it was something else. What were the ones you wanted to elaborate on?
Oh well, I was saying for named ranges.
That's right.
I actually don't really like using them except to make a dynamic chart. So there's a cool way you can use named ranges and an offset function so that when you add more data to a table, the chart will capture that and update it. So you don't have to do all the selecting of your chart. But generally speaking, I don't like naming ranges or cells or things like that in models. I think it makes it harder for other users and sort of for auditing and other reasons. But so it's to me, one use case for named ranges.
Okay, fair enough. And then on the Excel dying, you mentioned you share your thought why it's never going to die.
Well, because if I step all the way back and ask myself, what is Excel? If it's a spreadsheet, like meaning a sheet that is a grid with rows and columns, that interface is never going to go away. Like, I can't think of any other way to analyze numbers that's not in a grid. That's very useful to me. So like, I think Excel itself is going to change massively with AI, and the way we use it's going to change and everything. But I think we'll still want to go back to this interface that's a series of rows and columns.
And I agree with you. Whether Excel survives or not, and I always say it will die because everything dies, I don't see the spreadsheet interface ever going away.
Yeah. Okay, good point. If we're saying like a zero hedge, everything's dead in the long run, sure. But
yeah, well, it depends on how you define it, right? And since I get to ask the questions, I make sure I win.
Yeah. Nice.
I couldn't resist. Got to have a little bit of fun. But I totally know what you mean. I mean, like, obviously in the short term, Excel's not going anywhere. It's going to change. It's going to adjust. But that, like you said, the row column interface, it's hard to replace. It's fabulous for so many things.
Absolutely. And I mean, where else would you go to brainstorm or plan something that, like, right, when you just want to try on an idea, right? Like, where else are you going to go but a spreadsheet to play with those numbers? So.
Yep, I hear you. All right, so we're going to wrap up here. I have two more questions for you. The first is, if you could offer one final piece of advice to our audience to be a better financial modeler, what would be that piece of advice you'd offer them to get better at modeling?
Well, I hate to ask if I can give two, but since we've been talking technical,
okay, you can have two.
Appreciate it. Okay, so if we're talking technical, reverse engineering of other people's models, I think, is the best way to improve your skills. So what I mean by that is, like, find examples of models that you think are interesting, that are good, or whatever that excites you about them, and try to rebuild what they've done. And I don't mean like just like copy, like look at cell A1 and copy 1-to-1 like that. I just mean get to the same answers or results that they've gotten to and using it as a guide. And if you do that, you'll really learn. You'll probably improve on their model, quite frankly. You'll not only learn how they built it, but hopefully find some ways to make something better. So that's on the technical side. But then, since we've been talking about strategy here, I think going back to what we talked about earlier with looking at public companies, CEO scorecards, corporate scorecards, investor decks, and playing around with models that you've got and trying to connect them back to these strategic objectives, and just trying to connect those dots, build the mental model or mental framework to see doesn't fit. That would be my other one.
Thank you. Great advice. I appreciate you giving two. I like how you went with the technical and more on the strategic side. So last question, if our audience wants to learn more about you or potentially get in touch with you, what's the best way for them to do that?
Sure. I mean, the best way to get in touch would be LinkedIn, just my profile, Tim Vipond. You can find me there. Of course, corporatefinanceinstitute.com. You can read more about me there, or check out some of my courses or some of my colleagues' courses there as well.
All right. Well, thank you, Tim. I thoroughly enjoyed having you on the show. Really enjoyed chatting. And thank you for sharing some thoughts on strategy, about modeling in general. And I am really excited to share this with my audience.
Oh, thanks. It was an absolute pleasure. Thanks for having me.
Financial Modelers Corner was brought to you by the Financial Modeling Institute. This year, I completed the Advanced Financial Modeler certification, and it made me a better financial modeler. What are you waiting for? Visit FMI at www.fminstitute.com/podcast and use code podcast to save 15% when you enroll in one of the accreditations today.